Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. I think the word of the day is going to be volatility and slow. We'll get into details about what that all means in this market that's had an interesting trade and, no surprise, is reacting to what happens within the corn complex. We're going to talk about everything that's happening, and I'm sure weather's weighing in a bit as well with Brad Kooima. He joins us. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's talk about volatility with the market.
Yeah, for sure, Susan. I think you gave us a great setup there. Thanks for having me on again, of course. Yeah, it feels like you come to work here in the morning with suspenders and a parachute or something. Whatever safety device seems to work. Clearly, the market the last couple of days, and really for the last several weeks, but especially the last couple of days, has been greatly impacted by what is now perceived as going to be several chances of rain through the area that needs it the worst. In fact, the one forecasting method that's been probably the most accurate lately has got, I believe, 3 chances for rain in that driest part of the Corn Belt. And I'm talking about, unfortunately, not where you are necessarily, Susan, but that eastern Corn Belt, which is eastern Illinois, Indiana, and western Ohio. That seems to be the spot that the traders are watching, right? So with that increased chances of rain, and then also the extended forecast is wetter this morning than it was yesterday. So sharply lower corn obviously influenced that higher feeder cattle trade yesterday and again today, and that has a tendency to support the live cattle futures as well. I was a bit surprised on how the spreads traded today. I'm not going to lie. I would have thought maybe that the back months usually respond a little bit more to higher feeder cattle. That was not the case today. It looked like we had a pretty good round of fund buying on August cattle. Got all the way up into some pretty good resistance levels. In fact, took a lot of them out and then backed off a little bit on the close. So we did have a pretty good push, though, of some fun buying there on the August cattle during that last hour of the trade.
So we look at this. Obviously, we see the cattle and the corn trade back and forth all the time. But is this going to continue to be a pretty tough market for the month of July as we worry about where this corn crop's going to be?
I would say that's a fair assessment. Maybe not the whole month. I suppose it depends on the weather. If indeed that this weather pattern starts to develop, let's say in the next 2 weeks, then the typical show would be that by the time you get to that full week after July, the corn trader's made up his mind and said, okay, they're going to get a crop. We're gonna go lower. Or in the case of some of these drought years like 12. Oh, it's over. You can't rescue this crop anymore. And then from the 3rd week of June on, you just spiral, to the upside. I would guess, though, the farmer in me is going to say that there are too many areas here that don't have ample subsoil moisture, that even if it rains once and the market just broke 75 cents, that's what they think now. Does that give you a crop if you get a 1/2 inch to 3/4 inch of rain with no subsoil moisture? No way. So you're going to have to probably leg this thing all the way out through the end of July. And who knows, maybe longer. Like the area I'm sitting in doesn't have subsoil moisture either, but we've been very fortunate. We've been catching a rain every 7 to 10 days, so if you miss one of those, things get, pretty ugly pretty quick. Right now, we've got great potential, but it has to keep doing that, so this is the time of year where the rains are a little harder to come by as a rule too, but it does appear like the El Nino La Nina shift thing has happened, which does allow for better chances. I'm no weatherman, I'm sitting here trying to trade cattle futures, right?
Me either, so we're good. All I know is lack of rain has made frustrations for many of the cattle guys. Made for some definite dusty feedlots. Looking at this cash, it's pretty slow so far on this week. It was slow last week as well.
Yeah, the Packer seems to have a little more inventory around them compared to, say, 3-4 weeks ago when we were, high-fiving and backslapping with 185, 188, 190, that whole deal where we kind of caught them short. But there was a little trade in the South yesterday, maybe about 10,000 cattle in Kansas at 178. Texas traded a handful at 8 and then went to 9. Not very many, not very deep. That Fed cattle exchange, which frankly I had almost forgot about, it's still around. I had a couple of pens today at 180.75 in Texas. That's a little better. The trade finished up there last week, if you forgot, at 180. So I would say, kind of steady, maybe a little lower in Kansas. The North hasn't traded yet. Asking prices up here sit at near steady at 185. I did hear a little bit of 183. Maybe for maybe a call-in deal to one of the regionals. But it is only Wednesday. Traditionally, this is a tough week on cash, Susan. It's the old long for a short. You know, there's a holiday next week, so there'll be a shorter kill. They won't need as many. I wonder what the kill schedule exactly is going to be like. You know, what are they going to do with like that Monday night shift, if they've got it on or not? We'll see. I would expect that next week's kill will be quite a bit smaller, which maybe will help the beef market, but might not be great for the cash market.
So how are we doing weight-wise on these cattle?
Thanks for asking, because it's one of the things that I keep, you know, it's like finding the oyster in the clam, right? The weights are surprisingly low, and surprisingly contra-seasonal. Surprisingly low. I don't know if that said that right. It's surprising that it hasn't started to go up already on the weights. I look back at the 2014 data, and because that was my favorite year up until this year, the big bull market of 14. And even that year, when we were super current going in and stayed that way through the summer, our average weights had already started up 3 or 4 weeks ago. Now this time we are flat with last year's weights, and actually a couple pounds below last year, and flat with the week before and the week before's weights. Watching some of these formula weights, you know what a big fan I am of cattle formulas, but watching the weights on those sharply lower in the South the last 2 weeks on the weights. And when I look at the grade, which is also what I watch, Texas grade, just a tick over 66% choice and prime. How's that for lousy? But that would also, you know, give you another argument that if the weights are dropping, there's no grade then either, because they're pulling cattle forward, not enough days on feed. So I don't know, you know, one robin doesn't make it spring, but believe me, I'm going to watch very closely these weights here, because we just maybe, I've been saying all along, we're way more current and way more pulled forward than what most people think, and we certainly are in the North. So far, I don't see anything in the argument here to make me think any differently. So I did think that maybe the August cattle are going to have a little bit of trouble because of the fund roll. Big, long position by the funds. You got to like them when they're on your side. Now I want to see how well they do, you know, move in that position a little bit. So maybe be a little careful with the August thing for a second, but I'm hoping, when we get down the road 2 or 3 weeks, you and I'll be my good old, you know, bullish self here again, and we can have more fun.
So long term, what are you looking at for this market?
How about 212? That seems like a good number for fat cattle, don't you think?
That works.
I don't know, which all you people know that I don't know. But the way this thing's set up, we've got a monster market here at 190, 180, whatever, you know, they're both big, and we're not to the short numbers yet. You continue to get rain across the cow-calf country. We hold some heifers first quarter of next year without some sort of demand problem, of course, you know, a black swan type situation. You know, I wouldn't, I'd bet you a stake we'd got a shot at 200 anyway. I would do that. So.
And finally, what about these funds? Do they need to be moved out of August?
A bunch of them. You know, funds got the position up over 100,000, and looked like they added to it today, which is a little curious. But you know, next week they'll start the pre-roll, the 5th business day of July. They have to roll part of them. We'll see if the market can handle that really well without seeing the August lose to, you know, October and December. Then I think, you know, you'd say, well, then that is even more strong evidence that this market's probably not going to get much more than this for a summer low. That's what we're searching for. Where's the summer low going to happen? Around the week of the 4th of July. That's not unusual. So let's stay dialed in here and see maybe we'll catch a quick one this year.
Well, let's do our part and put something more than burgers and hot dogs on those grills come the 4th of July. I
saw our menu. We're going to do our part at our house. I know that.
All sounds good. Hey, what's the best way for folks to get a hold of you if they want to talk more cattle?
Well, our website, I think, will give you a whole lot of information. kkvtrading.com. kkvtrading.com. Thanks.
All right. Thanks for joining us this week, Brad.
That's been Brad
Kooima. As we always remind you, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.